The period of restricted inventory and extreme seller control in San Antonio has ended. The market has transitioned into a balanced, buyer-leaning environment. The days of blind, over-asking bidding wars are over. As of mid-2026, the market has moved past that high-friction phase. To understand this power shift, we have to look at one specific metric: months of supply. This chart tracks inventory levels from the historic lows of 2021. A balanced market typically requires 4 to 6 months of supply. In early 2026, San Antonio crossed that threshold for the first time in years. By May, we reached a full 6 months. On the ground, that means there are now over 7,000 active listings sitting on the market across the metro area. That represents an 18% increase in available homes compared to this time last year. This inventory surge ends the era of the take-it-or-leave-it seller. It transfers structural negotiating leverage directly to the buyer. But buyers still face a significant financial constraint. While you have more choices, you're likely carrying a mortgage rate in the low to mid 6% range. Sellers are feeling a different kind of pressure. Transaction timelines have stretched, with homes now sitting on the market for an average of 90 to 100 days. Even with higher inventory and slower sales, median prices have remained steady, generally holding between $260,000 and $325,000. We're going to analyze the submarket data to show buyers how to use this new leverage and help sellers avoid getting stuck in a crowded market. Success in 2026 requires moving past the assumptions of 2022. Both sides must now trade certain upfront costs for the security of a closed deal. For buyers, the 2026 market offers significant selection, but the monthly cost to borrow remains high. The trade-off is clear. You accept a 6% mortgage rate today in exchange for a level of negotiating power that didn't exist 3 years ago. This comparison shows the shift. You no longer waive due diligence. You can demand inspections and negotiate repairs without losing the house. With 7,000 listings, you submit offers below asking. The most important tool is the seller-paid concession. We are seeing many sellers cover 3 to 6% of closing costs. You can use that money to buy down your interest rate, which directly offsets the high macro rates. A winning buyer strategy in 2026 focuses on the total cost of ownership, using concessions to lower the monthly payment, rather than just fighting for a lower sales price. This dynamic is especially visible in the Northeast corridors like Cibolo and Schertz, where military moves and new builds dominate. Military buyers near Joint Base San Antonio have a very distinct advantage. They are entering a sub-market with highly motivated sellers and builders who are offering aggressive incentives to move inventory. The catch is that you're buying into areas with a massive supply of new construction. That high volume of nearby competition limits your potential for quick, short-term price appreciation compared to more established urban neighborhoods. If you are selling a home in 2026, time is your biggest risk. A single pricing error can leave your property sitting for over 100 days. You have 2 distinct pricing paths. Pricing at peak 2022 values creates market stigma and serial price cuts, resulting in less net cash. Alternatively, pricing strictly according to current comparables and preparing for competition secures 93 to 98% of list price. You have to earn that result. This means investing in pre-inspections, staging, and a budget for concessions to compete with the warranties offered by new home builders. The era of listing as is and expecting top dollar is over. Today, you must trade upfront effort and capital for a reliable closing date. Let's look at the final strategic recommendations based on your role and your level of capital. This matrix separates the successful participants from those struggling in the current market. For prepared buyers, especially those using VA loans, your goal is to exploit the high inventory levels. Use your leverage to secure rate buydowns rather than simple price reductions. Conversely, sellers who refuse to offer concessions or price to current market values risk having their listings sit indefinitely. There is also a shift for yield-seeking investors. With short-term price growth projected at just 1 to 4%, the focus has shifted from quick flips to long-term cash flow, specifically through military rentals. The San Antonio market is experiencing a stabilization, a necessary return to normal, functional mechanics after years of extreme conditions. Success in 2026 means aligning your strategy with the reality of a balanced, high-inventory environment rather than waiting for a return to the past.